You're watching the Daily Market Comment by Rafi Boyajian. I'm Cristina Marujos, and thank you for joining us at xm.com. The US dollar was heading towards three-week highs against a basket of currencies on Tuesday as investors pared back their expectations that the Federal Reserve would soon embark on an aggressive easing cycle. Following the upbeat U.S. jobs report on Friday, the odds of a 50 basis points rate cut have tumbled from around 20 to just 2.5%. But with risk assets having rallied since June on the back of rising expectations of sharp rate cuts, global equities continue to be weighed by the prospect of a more modest policy easing by the Fed. U.S. stocks ended the day in the red on Monday, with the Nasdaq Composite suffering the most. The tech-heavy index was pulled lower by a 2% slump in Apple shares, which came under pressure after the broker Rosenblatt Securities downgraded the company to sell on forecasts of lower iPhone and iPad sales. Fed Chairman Jerome Powell will kick off a busy week for Fed speakers. He will deliver opening remarks at an event organized by the Boston Federal Reserve at 12:45 GMT. It's unclear whether he will comment on monetary policy today, but he will certainly be talking about the economy and the rate path when he testifies before Congress on Wednesday and Thursday. Another chance to gauge the probability of a July rate cut could come from Wednesday's FOMC minutes of the June meeting, when the Fed made a dramatic shift to a more dovish stance. With the Fed seeming unlikely to signal big rate cuts at this point, the dollar looks set to maintain its bullish bias, especially if other central banks such as the ECB announce looser policy at their upcoming meetings, and that's one factor weighing on the euro currently. The pound also remains on the back foot, slipping to a fresh 6-month low. UK data on monthly GDP growth and industrial output will be watched tomorrow for signs whether the British economy contracted in the second quarter. The Bank of England could be forced to follow its counterparts in moving towards more accommodative policy if the data disappoints. This was today's Daily Market Comment. Thank you for watching us at xm.com.